What's good, y'all? Big Fish. What's good, you guys? Big Fish FX back with another video. Quick video before I head to the gym. Just an update on a move. One of the moves that I've taken this past week. Just want to show you guys what's going on here. So basically, this is Australian dollar versus Japanese yen. I don't usually trade Forex pairs anymore. I tend to stick with indices and crypto. So Bitcoin and not Bitcoin. I don't usually trade Bitcoin. I do trade Ethereum. So US30 and Ethereum those are the main things that I focus on. But if I see a setup with a Forex pair, how can I not take advantage, right? So this is AJ. AJ is a beautiful pair. Japanese yen pairs are beautiful pairs. When they run, they run. When they move, they move, right? So this, hold on. Yeah, I kind of had to adjust the screen. It was kind of annoying me. But yeah, this is a nice solid 1200 stacked pips that I got on the 12th. That was yesterday. But I got on the 12th, or it completed on the 12th. Let's make sure. What that say? Yep, May 12th. So it completed on the 12th. And it was a nice setup. I had 3 orders in. Nice little targets. I actually have 4. But anyways, let's take a look at the screenshots, because I keep my screenshots as a record. So I'll screenshot my analysis before I take the trade, and then I'll screenshot when the trade is completed or when the setup is completed. That way, if I mess up, then I can critique myself. I keep a journal in my Discord. So please keep a journal of what you're doing. So prior to me taking a trade, I'll screenshot it. I'll type in why I'm actually taking the trade. And then I'll take the trade. Then I'll screenshot the actual result. So if I mess up, I know where I can go back to see what's going on, and I can see exactly why I messed up. If I got it right, then it can reinforce my strategies, and it can reinforce my trading ability and skill set. So let me pull this up. This was on the 9th. We always discuss in our group. We discuss setups every Sunday. We discuss what is most likely going to happen for the upcoming week. So the Sunday that passed was the 8th. So I kind of missed the actual. I missed the initial move, right? So I noticed I missed it. So what I was down here waiting for that retracement to come down, right? And I drew what I drew, but then I added more to it. It was more than 2 orders. It was actually 3 that I was focused on. And so this was the 9th. And this was the update of what happened on the 12th. And it rejected right on the point that I projected for the target, which was a beautiful, beautiful, beautiful setup, right? Nice little prediction. I love when these work out like I need them to, and they do that a lot. And look at what it's doing now, right? So it's retracing. And based on the Fibonacci and other factors, this is why I took the trade, right? I'm not gonna give you everything, but I'm gonna give you enough for you to understand what's going on. So overall, this trend is an uptrend. It's an uptrend overall, which is good. But you have to understand with any instrument, crypto, Forex, indices, one thing you have to understand is price will never go a specific direction for too long. There's the market cycles. So it's been rallying for a good minute, for weeks. It's been rallying. So it was kind of due for a refresher. And then there's also a zone right here that it needed to close in. So right when it hit that zone, that's when it started coming down. and then we can scale down to a lower time frame, to the lower time frame. And we're looking at the 4 hour as this point, as you know, liquidity was pretty much grabbed at that point. Then that's pretty much a telltale sign that, you know, price was going to do what it does. So as it came down, I could have got it here. I just didn't get into the trade soon enough. I was focused on US 30 all last week, so I didn't look at any other pairs. And then get the retracement. You get in after the retracement, you could draw your Fibonacci. There's other things on here. There's liquidity zones, and there's also order blocks that you can look at. You can see the order blocks where it's attacking. So there was a lot of confluence going on here that gave me this particular target. If you draw the fib, this is a nice little target zone for the Fibonacci. And so that's pretty much what I did. It was nothing, you know, nothing crazy. But I did catch a nice, you know, the first one 1 to 21 risk to reward ratio, second one 1 to 15 risk to reward ratio, and then 1 to 19 risk to reward ratio with a 1200 pips stacked, and everything is there. So it's pretty solid. I took this on 2 different accounts. I only screenshotted one of them. Y'all don't need to see my bigger account, but on the smaller account, this was how I was trading it. As it was coming down, I was kind of closing orders, and I left these open for the TP target zone, and it went straight into that TP target zone and slingshot back up. So this is just to, you know, just to give this out, put this out there, you know what I'm saying? All you have to mainly focus on is market structure. You have to learn market structure. Fibonacci is pretty solid in an institutional order flow. You see gaps up here, and you see the order block right there, and then the liquidity zone at the top, and also on the higher time frame, we got the zone right here, the order block zone, and the gap right there as well. So it was set to go there. It was set to do this. So just a nice quick video on AUDJPY. Nice little 1200 stacked pips, stacked orders, and it just pretty much played out exactly how I had it mapped out. So yeah, if you have any questions, let me know. If you need one-on-one coaching, let me know. Contact me. In the description box is my contact information. If you want to learn how to trade Harmonics, that's in the description box as well. And also Market Structure 101 is in the description box. So yeah, happy trading, man. And please, just, you know, as you're getting your skills up in this trading game, always trust your analysis. Even if your analysis is wrong, always trust your analysis, because at the end of the day, even if it's wrong, you can correct yourself. Versus you following what other people are telling you, you won't be able to correct yourself because you don't even know, you know, why you took the trade in the first place. You're only just following what people are saying. So as you're evolving in this game, you want to trust your analysis, and you want to be the one to hold yourself accountable should things fall apart. And that's all I had to say. Just motivation for you guys. If you have any questions, let me know. Big fish. Let's go, y'all.